Our Capitol Hill reporter, Garrett Haake, and CNBC's Eamon Javers join me now to break down these developments. Garrett, let me start with you on Capitol Hill. It is hard to hear, Janet Yellen try to preach calm as she did there, and yet with all this calm, the banking system's fine. It's a little disconcerting that our biggest banks had to suddenly bail out a bank on its own when I thought the federal government had just guaranteed all deposits. So as secure as she just testified that it was, actions within the last hour indicate otherwise.
Well, Chuck, depending on how you want to look at it, it was always the banks who were bailing out other banks here, right? The FDIC, the bailout fund, if you want to call it that, for SVB, was funded by bank fees. I think one way you could look at this, and I'll defer to Eamon as the economic expert here, is the banks getting ahead of being told by the government to rescue a bank or being forced by the government to, increase their fees, fork over money and set aside for this kinds of rescues. And they got in front of it on their own to rescue First Republic, stop the contagion, and not appear once again to have been saved by the federal government. I think what you saw on the Hill today was a lot of frustration by lawmakers that we were once again in this position of banks being labeled a systemic risk to the U.S. economy, to the marketplace, that had to have this kind of extraordinary measures to back them up. But what I didn't hear, Chuck, was anybody with a better plan. And there was a lot of backward-focused attention on inflation from Republicans, on policies that might have led to inflation that increased this problem, and from Democrats at looking back perhaps at the 2018 law to loosen some Dodd-Frank rules that might have led us this way. But there was nobody saying we shouldn't take extraordinary measures to act right now. The options just aren't there otherwise.
All right, stick with me here, Garrett. Let me bring in Eamon here. Explain the First Republic decision, because it does seem like, I think, Garrett, was this a situation where, had the big banks not done this, one of them was going to be forced to take it over, and they didn't want to do that?
Well, the question is forced or encouraged, right? So,
compelled, I think is the word that gets used.
Yeah, this $30 billion deal that just happened within the past couple of minutes is exactly what this administration wanted to see, right? A big show of force from big private sector names. This is not taxpayer money, it's big bank money. The administration is going to see this as a big win, and you saw Treasury put out a statement right after that. We're going to learn more about how this came together, maybe in the next couple of minutes. But oftentimes what you see is government brokers these deals, brings the big banks to the table, argues to them, look, we've got a smaller size bank here that is struggling. We need you to have a capital infusion, because if you let this one go, the contagion could hurt the economy, could hurt you. It's in your best interest, and the government will sort of be the broker to make that deal happen, and then bill it as a private sector deal, because the politics of that are much better than taxpayer bailout.
What can you tell us about First Republic?
Well, a lot of times what happens in a situation like this is it's the next weakest link that everybody searches for. And you get sort of this mindset on Wall Street and among the banking community of, like, who's next, right? So First Republic kind of fit that bill in many ways, because it's a similar focus. A lot of high net worth clients, a lot of clients that were therefore had deposits that were uninsured over that $250,000 trigger, and maybe had a lot of assets on its books in treasuries that were now subpar, that were now underwater because of the way interest rates have changed over the past year, and may have had some of the same problems as Silicon Valley Bank.
Look, some of this is speculative analysis, but there seems to be at least some connection with some of these mid-sized banks and digital assets.
Yeah.
Are we going to find out that this is more of a problem here?
I think you might feel that this is more of a problem, because there's a lot of digital asset investment going on in Silicon Valley. And of course, we saw massive implosions in the digital asset space over the past
just
year
like 3 to 6 months ago.
Yeah,
so
absolutely.
Wouldn't it be not surprising that there's a bit of a lagging indicator, because suddenly people are starting to pull assets out?
Not surprising.
The second they can.
The indication right now is that this is to do with interest rates rising and banks that were heavily invested in treasuries and took a lot of risk on that bet and failed to adjust fast enough to a rising interest rate environment. Also, magnified by the fact that this is a Silicon Valley bank, and so it's like a very tech bro customer base there. They're all on Slack all the time. They're communicating very quickly. They're all talking to each other. It's a small community, and they all rush for the exits at the same time very fast.
Well, and that gets to me, Garrett. I'm curious, did you hear anything at that hearing about that issue? I mean, this was a social media fueled bank run, pure and simple. Right, $42 billion in less than 48 hours was taken away from Silicon Valley Bank. The bank run in 2008, sort of in the dark ages of the internet economy, was $16 billion over 10 days.
Yeah.
Was there any thoughts about is there a pause when you're trying to move more than $250 billion? I mean, is there any sort of regulatory ideas that were proposed at this hearing today on speed issues?
Well, Chuck, the speed was definitely a topic of conversation. Mark Warner brought it up. I think a lot of people's conception of a bank run, if you're not otherwise in the sector, is what you saw on It's a Wonderful Life. Now, imagine if it was somebody on Twitter blasting that message out, and not just folks running down the street. And that's exactly what this was. I mean, it was a Twitter-fueled bank run. So I think there is a widespread acknowledgement that that's what happened here. But what there was not was any particular desire to address this from a policy standpoint right away. Again, there's a huge division both between the parties and inside them over what kind of problem this is to solve. Some Democrats want to look at some of those regulations that were loosened in 2018, stress tests for banks of certain sizes. Some Democrats who voted for those loosenings of those regulations, including Mark Warner, don't want to have that conversation. Republicans, by and large, are pretty happy to sit on their hands here in terms of a legislative fix for this. Their argument here is this was caused, as Eamon alluded to, by rising inflation and Treasury assets that were sort of marked at a different rate, that all of a sudden these banks got caught holding stuff that wasn't worth what it looked like on paper, and that's a problem that isn't addressed by new legislation. It's addressed by smarter banks and regulators who aren't asleep at the switch.
The European Central Bank raised interest rates today despite all this.
Yeah.
What do you think Jay Powell does?
Oh, boy, that's a tough call for the Fed, right? I mean, if you raise interest rates, you say, we are committed to lowering inflation. We are committed to the plan we had. But you could cause additional breakage inside the financial system. So do they have the guts to continue with their plan? Or do they blink and say, you know what, we're going to hold off and see how bad this thing is? If you do that, though, you could signal that maybe you think it's worse than it is. And so it's all psychological and confidence.
And I'm just thinking how social media is destroying so many things, now including our financial sector. Anyway,
there you go.
Garrett, Haake, Eamon, Javers. Thank you both for getting us started. I'm joined now by...
Thanks for watching our YouTube channel. Follow today's top stories and breaking news by downloading the NBC News app.